evening, traders from across the globe, and welcome to the 1255th edition of Short-Term Trading Live with Oscar Carboni, and that, of course, would be me. Good evening, traders. These videos are geared to teach you the art of technical analysis. I hope that you learn about the charts watching these videos. If you are watching the videos and learning about the technical analysis, I have a feeling it's going to help you become a much better trader. So pay attention to these videos. As we know, futures trading can be extremely risky and can cause substantial financial loss. A stop is certainly not, well, let me just say this. A stop is your best friend. It is absolutely necessary during the movement that you're seeing now, this insane volatility. A stop is your best friend in this business because when you freeze in a moment of panic, your stop will knock you out. Stops don't always work 100% of the time, but in most cases, a stop will work. Traders, what you are about to see is mostly my opinion, but it is my opinion driven directly from a chart with no thought behind it at all. Oscar has no opinion. The opinion comes directly from the charts. All right, traders, so what are we looking at? For trading on Wednesday, December 10th, 2014, we've got two omnis on the board. We start off with a red omni and turn around and end up hopefully green. What does that mean? Traders, we expect the market to pull back a little bit, much like it did this morning. And in fact, a round of applause for the omni, as the Nasdaq was absolutely tumbling this morning. Omni gave us a buy. Omni said that the Nasdaq would find legs somewhere around 42.17. The low was 42.16 and a quarter. 42.16 and three quarters, and it exploded. Wow, go Omni! It caught the low this morning. All right, head down, right? Nose to the grindstone. On to the next trade. So, what we expect is a little bit more of the same. First, some downside, turn around upside. What does that mean? It is time to enact an old Oscarism called the two-day rule. Traders, I will enact the two-day rule in the emini, S&P, and Nasdaq, and I will show that to you in the chart segment. So down first, but I think eventually the market turns and we end up on the upside, much like you've seen in the Nasdaq and S&P on Tuesday. What else is on the board? So I'm going to show you the Oscarism, the two-day rule. We expect it to take place in the emini, S&P. Stops will be in just in case. Do I hear the sound of a dollar decoupling, traders? Do I hear a dollar decoupling taking hold when I listen to these markets? I am starting to see a little something going on. This massive volatility that we're seeing in the S&P and Nasdaq, and suddenly we're getting massive volatility in the dollar. And I told you the other day that if the dollar comes off even slightly, markets will just go haywire, right? Well, I think what's going to start to happen slowly now is a decoupling of the dollar from the U.S. stock market. Right now, it appears you cannot have an update in the S&P if you don't have an update in the dollar, and that does not have to continue that way. That will start to decouple. I think we will start to see that now. At least my 33 years in the business, my professional opinion tells me that the massive volatility that we are seeing in the market right now is being caused by the dollar slightly coming off, and the dollar needs to now decouple away from the stock market in order for the stock market to continue higher without much trouble. That's what I think could be happening, that major volatility that you're seeing. All right, traders, so that's what I wanted to show you. The Omni has been rocking and rolling and just killing it in the chat room. OmniX, come on down to livewithoscar.com. Take a look at my free chat room, see the trades, see how I handle them, see how I get my OmniX through these rough and tumble markets. Traders, with no further ado, let's go look at some charts. Okay, traders, the first chart this evening is the E-mini S&P daily bar. We will use the December contract for one more trading session. After Wednesday, we will roll over to the March, so for now it is December. What you are looking at is the daily bar chart, and this is what I call an Oscarism. It is my two-day rule, and what I'm expecting is the market to do this, and here's why. On certain occasions, and this is not always, but on certain occasions when the market calls for it, there is something that I like to enact called my two-day rule. And if you look at this chart, you'll see lately it has been the right thing to do. Up, 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 up. Down day, down day. 1, 2. Market goes back up. up, 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 small down day, right back up again. You can't even get big down days. Here, down day one, down day two, right back up again, right? Here's one, here's two, we went right back up. Here's down day one, here's down day two. Why not right back up? It sure did gain legs on Tuesday. Let's see what it does for Wednesday. So traders, that's what I'm looking at, your E-mini S&P. We will enact the Oscarism known as the 2-day rule. The weekly bar, same chart, weekly bar. Looks good to me so far, traders. I don't see any damage at all have been done by today's drop, even though it recovered. And this is most likely a flag anyway, so not much to worry about right now. If that changes, of course, we'll watch it on a daily basis. Right now, the weekly looks great, and it looks like the daily wants to gain some legs after a dip on Wednesday. Then you've got the Nasdaq. I showed this chart to you a couple of days ago in my Omni, and I said, look, we broke, and that prompted us to want to go short. The market did come off a little bit. We ended up getting long in the Nasdaq right here today. Thank you, Omni, very much. And it took off. Once again, day one, day two, we want to enact the 2-day rule on this one. And I believe it's going to work out. As it was going up, 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 down day, what happens next? It starts to recover once again. Small down day, another down day, it starts to recover. Generally, I like to look for 2 big down days like these. You can't even get them lately. So we are going to enact the 2-day rule in your E-mini S&P and your Nasdaq on the dailies. Once again, look at the weekly. I say the weekly's still doing just fine. Nothing wrong with that look. You're inside of what is likely a parallel channel pointing up. Nothing wrong here. So if you come down and test it, big deal. That's what markets do. So far, no reason to run from the market. Then there's the Russell traders. Look at the size of this Oscarism, a huge F flag. Look at the pole. Look at the size of the flag. We've been in it for quite some time, gyrating back and forth. Yesterday, on Tuesday, it came all the way down here, turned around, went all the way back and settled at the highs, gyrating inside of its flag. So that's what it looks like on the daily. And on the weekly, look at the flag. I mean, that is a very, very well-defined bull flag on your weekly. So we have reason to think the market should move higher, even though it had a scary down day on Tuesday. Then there's the gold traders. Why are these markets going crazy? Because the dollar has come off a little bit. And look at the gold. The dollar came off for 2 days. The gold went nuts to the upside. But before it went up, it built it nice. It built itself a very nice bull flag. I mean, nothing wrong with this flag. It looks really, really good. The market gets above it right here. This is the day on Tuesday. What a fantastic look. I say you got to really like gold, especially if the dollar continues to move lower. Gold would blast off. But it is dollar related, which is making the gold move higher. Then there's silver traders. Look at the silver. Once again, dollar starts to move a little bit lower. These markets react almost immediately. Another bull flag, and look at the breakout right here. This is silver's move, breakout of the bull flag. That is because the dollar moved down a little bit. When the dollar starts to decouple, these markets probably will go back down. But for now, we're day traders. Dollar decouples, pushing silver and gold up. And a little gem I wanted to show you, traders. Take a look at the corn chart. This is a favorite look to Investors Business Daily. In fact, every single chart they ever put out is some sort of a cup and handle, which I think is insane. I find one like once a year, once every 2 years. Here's one. I haven't shown you one in quite some time. Here's one I think is developing. Here's your cup. Here's your handle. This is the corn daily. Had a massive drop. Finally looks like it's bottoming out in this cup formation with the handle. But then there's this too, a nice V bottom, right? A nice V bottom look to this thing, as well as the cup and handle. I say corn is probably bottoming out here. So keep your eyes on the corn market, traders, because I think we've got something to watch. And of course, what's making all of this happen? Right here. Getting a little heavy. The dollar's been in a run for quite some time. It just broke out of this really nice bull flag, went even higher. But look, getting some big volatility up here now. Big volatility. Broke this support line, sitting down here, putting some weight on the stock market yesterday. But again, I think you get a decoupling to start to take place. If this massive volatility up here continues, you will get a decoupling from the dollar and U.S. indices. For now, they are coupled together. I think the large volatility we're seeing is the beginnings of a dollar decoupling. We'll play that one day at a time. So it's out of its comfort zone just a little bit, and that's a little bit discouraging for some of the markets, and they're turning around and heading right back up. Commodities and currencies should rally back up if the dollar comes off. Keep your eyes peeled on that one. But U.S. indices should move higher no matter what ends up happening by day's end. Traders, pull your own charts, do your own homework. I'll see you at livewithoscar.com. So, traders, you've seen the charts, and there is my reasoning why. We've got first the red Omni, and then hopefully the green. We are starting off selling, and then hopefully we'll get a deep enough dip, and we'll end up being buyers. Now, traders, one of the best things I could say happened to me in a while was watching my son today win the ping pong tournament. Come on up here, Mikey.
Yeah, Mikey.
There's my sweet prince. Look at this trophy. First place for doubles, third place for singles. He brings home the trophy for the school. Way to go,
Yeah.
Mikey. How about that? My
Mikey.
sweet prince. Mwah, great job, kid. He's a great analyst in his own right, too. You'll see. You'll be reading about this kid in Wall Street in no time. Thank you, Mike. Great job, kid. We love it. All right, so Trace, you want to stay up here and finish it with me?
Oh, sure. Let me
Come on, stay here. Well, hold on to that trophy. What are you crazy? I'll hold it for you. Come on, I'm proud. I'm a proud dad. This is his trophy. His, my dad, my son. All right, ready? Traders, always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Come on, kid. Stop, start, in. Emotions are our rock and roll. Traders and Mikey, great job on ping pong, baby. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.